for every preference shareholder, they are giving 10 equity shares. So I have written 10 by 1 into the number of shares in Krishna Limited is 5,000 preference shares. When you prepare the realization account, whatever is the loss on realization, that should be transferred to equity shareholders account. Whatever is remaining in the balance sheet liability side, the rest of the funds will go to equity shareholders account. Hello everyone, I am Purnima, faculty in the Department of Commerce and Management, Vidhyaashram First Grade College, Temple of Excellence, MYSURU. I welcome you all to this session 8 of Unit 2. In this session 8 of Unit 2, we will be working out some more problems on amalgamation in the nature of purchase. Now let us see the problem here. So Krishna Limited and Devaraya Limited, carrying on a business, agreed to amalgamate by transferring their undertakings to a new company called Krishna Devaraya Limited. The balance sheets of the two companies as on the date of transfer were as follows. So there are two companies here, Krishna Limited and Devaraya Limited. They have agreed to amalgamate. They have agreed to become a new company called Krishna Devaraya Limited. Now, the balance sheets of Krishna Limited and Devaraya Limited are given here. Now, the first thing is we have to close the books of Krishna Limited. We also have to close the books of Devaraya Limited, and then we have to prepare the opening balance sheet of the new company. Now, let us see the balance sheet here. So, here we have the liabilities on the left side. So, share capital, equity shares of rupees 100 each. In Krishna Limited, they have a share capital of 5 lakhs. In Devaraya Limited, there is a capital of 3 lakhs. Then, preference shares of rupees 100 each, 5 lakhs, 2 lakhs 50,000. So, debentures, there are no debentures in Krishna Limited, whereas in Devaraya Limited, there is a debenture of 40,000. Then, general reserve, Krishna Limited 2 lakhs, Devaraya Limited 70,000. Profit and loss account, 1,15,000, 55,000. Sundry creditors 75,000 and 35,000. So the total liabilities of Krishna Limited is 13,90,000, whereas the liabilities of Devaraya Limited is 7,50,000. Now, on the asset side, we have the land and buildings. The land and buildings of Krishna Limited is worth 4,65,000 and of Devaraya Limited is 2,55,000. Then next we have the plant and machinery. Krishna Limited it is 5,60,000. Devaraya Limited it is 3,58,000. Then furniture and fittings 79,000 and 34,000. Then stock values, Krishna Limited 81,500, 52,000. Debtors 56,000, 24,600. Cash at bank 87,000, 22,500. Cash in hand 6,400, 3,900. Preliminary expenses 55,100. And in Devaraya Limited, there are no preliminary expenses. Total is 13,90,000 and 7,50,000. Now, what do we mean by preliminary expenses? So, preliminary expenses are those expenses which are incurred during the formation of the company. So, these expenses will not be written off in the first year. So, slowly a small part of the preliminary expenses will be written off every year. So, it will be shown every year in the balance sheet on the asset side. Now, whenever we are given problems on amalgamation, we should know how to go about the working of that particular problem here. So, whenever we are given these assets and liabilities, then we have the list of all the assets and we have the list of liabilities. Next, we will see what is the additional information here. The terms of agreement were as under. So, what are the terms of agreement here? All the assets and liabilities of the two companies were taken over by Krishna Devaraya Limited at their book values, except that a provision of 5% to be raised on debtors. Now, they have agreed to take all the assets and liabilities at the book values. Only condition is there should be a 5% RBD on debtors. Now, what is RBD? Reserve for bad debts. So, the reserve for bad debts to be raised on the debtors. Then, next one is the discharge of the debentures in Devaraya Limited at a premium of 5% by the issue of 7% debentures in Krishna Devaraya Limited. Now, they want to discharge the debentures. How do they discharge the debentures? By issuing new debentures in the new company. Then, the third one is the issue of 10 equity shares of rupees 10 each at a premium of rupees 2 per share for each preference share held in both the companies. Now, they are giving 10 equity shares of rupees 10 each at a premium of rupees 2 per share for each preference share. So, 10 equity shares are issued for one preference share. So, it will be 10 by 1. So, one preference share held in both the companies. So, whenever there are preference shares in both the companies, so each preference shareholder will get 10 equity shares. So, that too at a premium of rupees 12. Then, to issue 10 equity shares of rupees 10 each at a premium of rupees 2 per share and 22 rupees in cash for each equity share in Krishna Limited. Now, this is for the preference shareholders. See, for the preference shareholders, for each preference shareholder, they are giving 10 equity shares. Now, this is the shares of Krishna Limited. So, Krishna Limited shareholders, each preference shareholder gets 10 equity shares. Now, here, this is for the equity shareholders of Krishna Limited to issue 10 equity shares of rupees 10 each at a premium of rupees 2 per share and rupees 22 in cash for each equity share in Krishna Limited. Now, this is for preference shareholders. Now, for the equity shareholders, again, they are giving 10 equity shares at a premium of 2 rupees per share and rupees 22 in cash. So, for each equity shareholder, they are giving 10 equity shares and also they are paying rupees 22 in cash. So, they are giving 10 equity shares plus rupees 22 in cash for every equity shareholder. So, this we should understand step by step. So, if you just read the sentence in one stretch, you will not be able to understand. So, you have to just see whatever is the relevant information, take it, analyze it, and then you have to move ahead. Then 5 equity shares of rupees 10 each at a premium of rupees 2 per share and rupees 80 in cash for every share in Devaraya Limited. Now, for the equity shares of Devaraya Limited, they are giving 5 equity shares of rupees 10 each at a premium of 2 per share and rupees 80 rupees in cash. Now, for Krishna Limited, they are paying 22 rupees in cash, whereas for Devaraya Limited, they are paying 80 rupees in cash. Now, in order to raise working capital and to pay the purchase consideration, Krishna Devaraya Limited decided to issue 30,000 equity shares of rupees 10 each at a premium of 2 rupees 50 per share. Now, and so they are having the purchase consideration. What is the purchase consideration? They are issuing 30,000 equity shares into 10 rupees each at a premium of 12 rupees 50 paisa. So, this is the purchase consideration they are paying. Past journal entries in the books of Krishna Limited to close its accounts and show the opening balance sheet of Krishna Devaraya Limited. Now, this is the problem. They have given us the mode of payment and also they have asked us to pass journal entries in the books of Krishna Limited and the opening balance sheet in the books of Krishnadevaraya Limited. Now, whenever we are given a problem on this merger or amalgamation, the first thing is we have to calculate the purchase consideration. Now, let us see the calculation of purchase consideration. I'll just show you here. So, this is the calculation of purchase consideration. So, how do we calculate purchase consideration here of Krishna Limited? So, for Krishna Limited, their payment to preference shareholders. Now, what is the payment they are making here? For every preference shareholder, they are giving 10 equity shares. So, I have written 10 by 1 into the number of shares in Krishna Limited is 5,000 preference shares. So, for 10 by 1 into 5,000, so that will be 50,000 equity shares of rupees 10 each. So, 10 by 1 into 5,000. 5,000 is the number of equity shares in Krishna Limited. So, 50,000 equity shares of rupees 10 each at rupees 12 per share. So, 50,000 into 12 is 6 lakhs. So, this is the payment made to preference shareholders. So, preference shareholders are getting shares worth rupees 6 lakhs. Now, the payment to equity shareholders. Now, what is the payment to equity shareholders? Again here, every equity shareholder gets 10 equity shares. So, that is why I have written 10 by 1 into the number of equity shares in Krishna Limited is again 5,000. So, that will be 50,000 equity shares of rupees 10 each at rupees 12 per share. So, again it will be 50,000 into 12. See, we should understand that whenever we are calculating purchase consideration, it will always be at the issue price. So, the issue price becomes important, not the face value. So, what is the issue price? The 10 rupees is the face value, but issue price is 12 rupees. So, 50,000 into 12. So, this is the 6 lakhs. Then, next they have also told that they are making cash payment of 22 rupees for every equity shareholder. Now, how many equity shares are there? 5,000. So, 5,000 into 22 rupees. So, this is 22 rupees. So, 5,000 into 22 rupees comes up to 1,10,000. So, the purchase consideration, when you add all this, it becomes 13,10,000. So, this is the purchase consideration paid to Krishna Limited. So, they have a purchase consideration of 13,10,000. Then, next is the Devaraya Limited. In Devaraya Limited, the payment to preference shareholders. Again, the preference shareholders of Devaraya Limited, each preference shareholder gets 10 equity shares. So, that is why I have written 10 by 1 into number of preference shares in Devaraya Limited. What is the number of preference shares? 2,500. So, 10 into 2,500, I get 25,000 equity shares of rupees 10 each at rupees 12 per share. So, that comes up to 3 lakhs. Then, next is payment to equity shareholders. So, every equity shareholder gets 5 equity shares. So, that's why I have written 5 by 1 into 3,000. So, that comes up to 15,000 equity shares of rupees 10 each at to rupees 12 per share. So, here also issue price becomes important. So, it will be 15,000 into 12, that is 1,80,000. Then they have also told that there is a cash payment of 80 rupees for every shareholder. Now, there are 3,000 shareholders in Devaraya Limited, and 3,000 into 80, that comes up to 2,40,000. Now, the purchase consideration is, when you add all this, you add, so you get 7,20,000 20,000. So this is the purchase consideration paid to Devaraya Limited. So here we have the calculation of purchase consideration. So whenever you are given a problem of amalgamation, the first step will be to calculate the purchase consideration if it is not given. Here it is the payment method. They have followed the net payment method of purchase consideration. So here they have told us actually what is the number of shares to be paid, and they have also told us what is the cash to be paid to the shareholders. So that is why we call it as the net payment method. So under this net payment method, whatever the payment, whatever is being specified, so that we calculate and we make a note of it, and then at last we get what is the purchase consideration due to that particular company. So this is the calculation of purchase consideration. Now the next step will be, so if you can see the balance sheet here, the first company's balance sheet, whatever is given here. So we have the various assets. Now what is the condition for assets? All assets to be transferred. All assets to be transferred. So where will you transfer? To realization account. So debit column. So whenever you are given a problem on amalgamation, you try to see that the books of accounts are closed. So how do you close the books of accounts of the assets? So all the assets will be transferred to realization account debit side. Then there is the cash. If cash is taken over only, you have to transfer the cash and bank cash in hand. But if cash is not taken over by the purchasing company, then you need not transfer the cash to realization account. So only the exception of cash. Cash should be transferred only if it is taken over by the purchasing company. If it is not taken over, don't transfer cash to realization account. Then coming to this preliminary expenses, it is a fictitious asset and it is a loss to the company. So this should be transferred to equity shareholders account. So this should go to equity shareholders account. Any loss should be transferred to equity shareholders account. Then the next one is we have to take care of the liabilities here. Now for Krishna Limited, there are no debentures at all. Only they have sundry creditors. So this sundry creditors, it has to be transferred to realization account credit side. So realization account credit side, you transfer the sundry creditors. Then what is left over in the balance sheet? We have the equity capital, preference capital, general reserve, profit and loss account. So with this preference shareholders, preference share capital, it will be transferred to preference shareholders account. So make a note of it. Preference share capital will be transferred to preference shareholders account, whereas equity share capital will be transferred to equity shareholders account. So this amount should go to equity shareholders, and also the general reserve and profit and loss account, they are all shareholders funds. So they are all shareholders funds. So these shareholders funds also will go to equity shareholders account. So what are the things which will go to shareholders account? This equity share capital, general reserve, profit and loss account, it will go to equity shareholders account, whereas preference share capital, it will go to preference shareholders account. And if there is any loss in settlement of preference shareholders, then that loss will be debited to realization account. The same way, if there is any profit, it should be credited to realization account. Then preliminary expenses is a loss which has to be borne by the shareholders of the company. So in this way, we have analyzed the entire balance sheet, whatever has been given in the problem. So all assets transferred to realization account debit side, all liabilities taken over only. Only those liabilities which are taken over should be transferred to realization account credit side. Then we have the shareholders funds here, that is the general reserve, profit and loss account and share capital. All these three should be transferred to equity shareholders account, and this is preliminary expenses which is a loss to the company. It also should be transferred to equity shareholders account. Then when you prepare the realization account, whatever is the loss on realization, that should be transferred to equity shareholders account. If there is a profit on realization, that also should be transferred to equity shareholders account. So in this way, we have to make a note of the balance sheet. So all assets to realization account, cash should be transferred only if it is taken over by the purchasing company. Preliminary expenses to equity shareholders account, shareholders funds will go to shareholders account, liabilities will go to realization account, and a preference share capital will go to preference shareholders account. Now this problem we have already discussed here. So we will see what will be the journal entry. Now the first entry will be for transfer of all assets. See, whenever you are transferring assets to realization account, it will always be in the balance sheet values. Balance sheet values only it has to be transferred. So there will be two values given in the problem. Usually there will be agreed values and balance sheet values. So when you are transferring to realization account, it will be always in the balance sheet values. But when you are calculating purchase consideration, it should be in the agreed values. So when calculate purchase consideration, you make use of the agreed values of assets. But when you are transferring the assets to the realization account, make use of the balance sheet values. So realization account debtor to land and buildings. So whatever is the given in the balance sheet, the same amount I am writing. To plant and machinery 5,60,000, to furniture and fitting 79,000, to stock 81,500, to debtors, to cash, to bank. See, they have not mentioned whether cash is not taken over. So we assume that cash is also taken over by the purchasing company. So that is why we have transferred the cash account to realization account, being assets transferred. Now next one will be the transfer of liabilities. Now how many liabilities are there here? Only one liability. Now what is that liability here? Creditors account debtor. Now what is the value of creditors? 75,000 to realization account, being liabilities taken over. So this entry we have passed for taking over the liabilities of Krishna Limited. Then next one will be, we have to pass an entry for purchase consideration due. So who has to pay us purchase consideration? Krishna Deva Raya Limited has to pay us. Now what is the purchase consideration we have calculated? So it is 13,10,000 to realization account, 13,10,000. So in the realization account, a rough account you prepare. So all assets here, all liabilities will be here. Then we have the purchase consideration which has to be mentioned on the credit side. So the purchase consideration is 13,10,000. Then next one will be the settlement of purchase consideration. How they are paying the purchase consideration? So equity shares in Deva Raya Limited. So if you remember, in this 6 lakhs worth of shares has been paid to preference shareholders. 6 lakh worth of shares has been paid to equity shareholders. So the total shareholdings in Krishna Deva Raya Limited is 12 lakhs, and the bank, so they are paying 22 rupees in cash for every equity shareholder. So 22 into 5,000 comes up to 1,10,000, and to Krishna Deva Raya Limited it is 13,10,000, being settlement of purchase consideration. So this is the entry for purchase consideration due. This is for settling the purchase consideration. Now the next step will be, we have to transfer the preference share capital to preference shareholders account. Now when we are settling the a preference shareholders account. When we are preparing preference shareholders account, we write on the credit side by preference share capital. So what is the preference share capital here? It will be 5 lakhs. So they are paying extra. So realization account debtor 1 lakh. So realization account debtor to preference shareholders account 1 lakh, being loss on settlement transferred to realization account. If you can see here, they are paying how much? They are paying 6 lakhs to preference shareholders. But what is the preference share capital here? Preference share capital is 5 lakhs only. They are paying 1 lakh extra. This 1 lakh extra is a loss to the company. That loss has to be transferred to realization account. So that is why we have an entry here, realization account debtor 1 lakh. So out of they are paying 6 lakhs, but actual payment should have been 5 lakhs. So 6 lakhs minus 5 lakhs, 1 lakh is the loss which should be debited to realization account. So realization account debtor to preference shareholders account 1 lakh, being loss on settlement transferred to realization account. Then next, equity shareholders account 49,900 to realization account 49,900. So this is the extra payment made to the equity shareholders. So that extra payment also, it is a loss to the company which has to be transferred to the realization account. Then the next one will be you transfer all the reserves and the capital to equity shareholders account. Equity share capital account debtor 5 lakhs. Then general reserve account debtor 2 lakhs. Profit and loss account debtor 1,50,000. Two preliminary expenses account 55,100. Two equity shareholders account 7,59,900. So we have transferred all the reserves, all the capital and all the other preliminary expenses, which is a deferred expenditure. So all of this have been transferred to equity shareholders account, being equity share capital, reserve, profit and loss account, preliminary expenses, balances transferred to equity shareholders account. So we have transferred. So the whatever is remaining in the balance sheet liability side, the rest of the funds will go to equity shareholders account. Then next one will be equity shareholders account debtor 7,10,000 to equity shares in C Limited. So that is 6 lakhs to bank account 1,10,000. So being settlement of equity shareholders by the issue of equity shares. Now next we have the opening balance sheet. Now in the opening balance sheet, what are the things we have to mention here? Now we have just passed only the journal entries in the books of Krishna Limited. The same set of journal entries you will find in the books of Devaraya Limited. So the same method has to be followed, and then finally we come up with the balance sheet of Krishna Devaraya Limited. Now let us see the balance sheet here. Now equity share capital 1,70,000 equity shares of rupees 10 each, 17 lakhs. So this is the balance sheet here. So how do we get this 1,70,000? If you can see here, whatever is the number of shares, so they have told us they have decided to issue 30,000 equity shares of rupees 10 each at a premium of rupees 2 rupees 50 per share. So this 30,000 equity shares plus they are also issuing this 5,000, 5,000 etc. Totally it comes up to 1,70,000 equity shares of rupees 10 each. So it will be 17 lakhs. Then reserves and surplus is nil. So why it is nil? They have all been transferred to equity shareholders account. Then we have the securities premium here. This securities premium is coming because the shares are issued at a premium. Sometimes the share are issued at a premium of 2 rupees. So 10 rupees share are issued at a premium of 2 rupees. So this 2 rupees is the securities premium account. Sometimes the security premium goes up to 2 rupees 50 paisa. So all that adds up to 3,55,000. Then 7% debentures. So this debenture holders, they are settled. The same amount is there. Then creditors 1,10,000. So you write it as it is. Then next will be the goodwill account. So whatever is the value of goodwill, the difference between the purchase consideration and the share capital, so that will come as the goodwill. Then land and buildings 7,20,000, plant and machinery 9,18,000, furniture and fittings. Then we have the stock 1,33,500. So total debtors, on the total debtors, we have the 5% reserve for bad debts. The RBD is the reserve for bad debts. So it comes up to 76,570. You add the cash balances of K Limited and D Limited 25,000. Cash in hand 10,300. The total comes up to 22,05,000. So this is the total of the opening balance sheet of Krishnadevaraya Limited. So whenever we are given a problem of this kind, first thing is we have to calculate purchase consideration. Then the next step will be we have to prepare the realization account. So you can have a rough copy of the realization account in the working column. So when you have the realization account, when you prepare it, you will know exactly whether there is a profit or loss on realization, which will be transferred to the shareholders account, and then we can just pass we have to prepare the shareholders account, and then we can, if the shareholders account tallies, if there is no balance remaining in shareholders account, it means that your problem is correct. So in this way, we have to prepare this problem, or we have to calculate the solution for this kind of problems on amalgamation in the nature of purchase. So this is the calculation of purchase consideration here. So the payment to preference shareholders, so they have paid 50,000 equity shares there, again 50,000 equity shares. So 50,000 plus 50,000, it comes up to 1 lakh. Then again 25,000 here. So it will be 50,000 plus 50,000 plus 25,000 plus 15,000 plus 30,000. So when you add all this, we get 1,70,000. 1,70,000 shares into 10. So that will come up to 17 lakhs. So 17 lakhs is the share capital of Krishnadevaraya Limited. So 50,000 plus 50,000 plus 25,000 plus 15,000 plus 30,000, it comes up to 1,70,000. So into 10 will be 17 lakhs. So in this way, we have to calculate the purchase consideration and also the balance sheet. So when you are preparing the balance sheet, you should be careful about the number of shares. So this is the shares issued to the shareholders of Krishna Limited. This is the share issued to shareholders of Devaraya Limited. All this you have to take it into consideration and then prepare the opening balance sheet. So with this, we come to the end of this session. Hope you have all followed it. Thank you.